What's up, YouTube? In this video, we're going to go over TSM, Taiwan Semiconductors, year to date up 26.98% over the course of 1 year, 13.46%. We're going to hop over to their financials real quick, show you how companies just grows year over year. So their income statement, revenues, start back here, go back 2014, 2013 if you want, year over year, just continues to grow. And this is also in US dollars, not Taiwanese dollars. Um, just very stable, consistent growing company. Their operating income, same thing, is just continues to grow. It's not shrinking. There's a little bit of a shrinkage rate here, but overall continues to grow. And based on overall revenues, just shy of about a 50%, operating income. The cash flow, another big thing in my opinion, is the overall cash from operations. Same thing, just continues to grow and grow and grow. They're doing $52.4 billion in a year of cash flow, cash from operations. Their overall cash flow, which you'll see on the valuation spreadsheet, is also just growing and growing and growing and growing, which is fantastic. So come over to here. We can see where their revenues kind of come from. Majority of it comes from smartphones and high performance computing. Their three main customers: Apple, Nvidia, and AMD. So obviously AMD and Nvidia are the high performance computing. Apple is probably just the majority of the smartphone section there. We'll come over to their earnings report, their press release that they have. And in their press release here, they are saying right here, for those that are dividend investors, they're expected to shift their dividend from sustainable to steadily increasing cash dividend per share in the next few years. Then, as we kind of move down lower here, our business in the second quarter was impacted by the overall global economic conditions, which dampened the end market demand and customers' ongoing inventory adjustment. Okay, so temporary. Moving into the third quarter, we have recently observed an increase in AI demand. It is not enough to offset the overall cyclicality of our business. So it sounds like AI is not going to be a big part of what they do. But it sounds like there's a part to be had. So due to persistent weaker overall macroeconomic conditions, slower than expected demand recovery in China, and overall softer end market demand conditions, customers are more cautious and intend to further control their inventory into Q4, so they don't want to buy more than what they need. And then come down here. That's why we maintain our forecast for 23 semiconductor market, excluding memory, to decline mid-single digit year over year. We now expect the foundry industry to decline to mid-teens and our full year 23 revenue to decline around 10% in the US dollar term. With such inventory control, we also forecast the fabless semiconductor inventory to exit Q4 23 at a healthier and lower level as compared to our expected 3 months ago. Not ideal. The recent increase in AI related demand is directionally positive for TSM. Generative AI requires higher computing power and interconnected bandwidth, which drives increasing semiconductor content. So whether using CPUs, GPUs, or ASICs, machine learning, the commonality is that it requires the use of leading edge technology and a strong foundry design ecosystem, all of TSM's strengths. So down here, they said we forecast the AI section here to grow close to 50% compounded annual growth rate in the next 5 years, increase to low teens percent of our revenue. So like they kind of set up here, it's not going to be a big part of their revenue. It's only going to be a small part of their revenue, but it looks like it should add potentially 15% to the revenues. In Arizona, they also are building a plant in Arizona. However, they're not able to find it skilled workers to put into this plant to build these chips. So they're pushing out like uh, the production to be, I believe, was 2025 here. Got to train a bunch of people to actually know how to build these chips. The valuation spreadsheet and go over the valuations of TSM. Ticker TSM, dividend yields 1.9%, return on invested capital 25.9%. Fantastic. Down here we have our EPS growth rate, you know, negative this year, but next 2 years are looking, you know, nice growth right there. Again, negative on their revenue growth, which gives us a Peter Lynch value of 0.62 and a fair value of $47 per share. Multiple comparisons. We have ABGO, TXN, QCOM, and gives us a multiples comparison average price of $120 per share for TSM. Manual PE, current market cap $444 billion. Cash equivalents basically 48 billion. Debt 61 billion. Cash from operations annualized $46.6 billion. Gives them a multiple to equal their current market cap of 9.8 years. Price to book. They have total assets of $165 billion, $62 billion in liabilities, 5.1 billion shares. Gives them a price to book ratio of 4.74. The average 5 year is 5.5. And gives them their peg today is 1.72. Future peg 1.66. We come over here to Graham's valuation, and overall the Graham's valuation calculator gives them a intrinsic value of $83.64 per share. Come over to DCF calculator, interest expense, income tax, pre-tax, gives them 8.22 weighted average cost of capital. That auto populates over to here, 2.5% on the perpetual growth rate. And I gave them a 21% free cash flow growth rate based on the average growth rate. Analyst growth rate was the lower of the two, so I'm going to go with the lowest one. As you can see here, though, their free cash flow is just growing, not steadily, but it's growing overall. It's a little up and down, but it's growing and currently sitting at $17 billion of free cash flow. Fantastic. Come down here, and that gives us a discounted free cash flow per share of $134. And then, last but not least, Rule 72, current EPS 585. Growth rate, the lowest one is 6% growth rate. So we plug in 6%. 6 goes into 72 12 times. 12 goes into 10 years, only 0.83 times. So we're going to do one annual double of our EPS. Gives us 11.68, so 11.7 for our future EPS. Fair value, $47.39 with a 30% margin of safety of $33.17. So that come over here gives us an average price of $88.75 per share with a 30% margin of safety of $62.13 per share. Now, I want to go back and change two things real quick, just to show you guys what would happen if this company was just to do a zero on this upcoming year. That's going to change our Peter Lynch fair value from, $47, I believe, to $95 per share. And it's going to change our forward looking peg and our today's peg of 1.22 and 1.88. So if you can get under one, I mean, even right where it's sitting now is very, very well valued. And then it also gives us a better Graham's valuation intrinsic value of $125 per share. Also, that would also change our EPS growth rate. So let's say it's going to be 12, hypothetically speaking. Then that gives us a 1.6. So we'll do, instead of 24, we'll give it 18. That gives us a fair value of 147 and a purchase price of 102. Come down here. Now this changes so many things, and this to me seems so much more accurate based on seeing those negatives. I think those negatives just make it kind of skewed so much to the downside. So an average price of $126 per share with a purchase price of $88.60 per share. Um, so you can kind of see just if they don't decline as much as analysts are expecting it to, and they kind of maintain a just a flat that currently this company is trading really close to that 30% margin of safety, but based on because of how um, consistent this company is, it's going to be pretty difficult, I think, to get to that $88 per share, although it has done it recently. Um, so a couple real quick takeaways on TSM here. They have a great return on invested capital, decent balance sheet. Personally, I would like to see less debt or more cash, but also it is, a company that has to consistently invest in innovation. They have a good free cash flow. Would like to see it stabilize more, but overall, it's doubled over the last 5 years. It's still a really good free cash flow. These are just be me being a little nitpicky on some of the things here. If I was to be say, oh, I'd like to see is perfect. That's what I would like to see. The PEG, years of valuation, price to book are all really well valued based on this established company. So all those valuations are telling us this company is very well valued currently, potentially even cheap. It's just the things that are killing it is just the future growth rate for the rest of this year. If this was actually growing this year, I can only imagine what these two numbers would actually genuinely be. So the bad takeaways here, the rest of this year, the growth, just kind of kills the valuations. Um, they do have the China invasion risk. However, China has quite the economy situation going on. I don't think their main focus is taking over Taiwan, at least anytime real soon. They got bigger fish to fry, I believe. And their future guidance of shrinking gross margin and operating margin, you don't like to ever see that, but they also did kind of say that that's more for the shorter term, and then that should correct. So yeah, that's my takeaway on TSM. Let's hop over the stock chart real quick. So TSM just consistently going, in an uptrend here. Had a big spike right there, M top there. Overall, it's making higher highs here. It's on the bottom of this, macro trend here. Um, it could break through. I see maybe a potential support resistance area right in this range, 80 to $85, which is right where our, you know, valuation comes in at if it holds a zero. But that'd be nice to see if it did come down into the 80, 85 range here. I'd be very interested to pick up some shares of TSM in this range. Um, Overall, this thing could pull back to, 70-ish dollars and then continue higher to continue this longer term uptrend here. But overall, I mean, TSM, technically speaking, looks good. It's in an uptrend in the shorter term here, and it could bounce off this line and continue higher. Yeah, so I mean, overall, I like TSM. I think it's a good company. It's looking to increase its dividends in the future, which is always, a positive, especially if you're a dividend investor. The only real big downside is that China risk to TSM. Otherwise, I think TSM is going to continue to be the overall leader. And so that's my take on TSM. Let me know what you guys think about TSM, and if you found value in this video, consider liking and subscribing, and we'll be back tomorrow with another stock analysis video.